Hello, everyone, and welcome back to the latest episode of Real Take Real Estate, where we give you our real take on today's housing market and everything to do with real estate. I'm your host, Maddie Maloney, joined by my co-hosts,
Joe Sambear
and Sam Fada.
So today we are talking about a hot topic lately, and that is refinancing. Now, we've gone over some cash out refinancing and how to tap into your equity. But lately right now, as rates are dropping, just a simple rate and term refinance is a very hot topic. Why is it a hot topic? Well, for everyone who has locked into a loan and purchased a home in the past couple of years, they had that higher rate. And typically at closing, we've talked about, all right, this is a temporary rate, and in the future, we are going to be able to refinance. Well, that time may be here for some buyers. So we wanted to talk about, why now, some of the benefits of a rate and term refinance, some things to watch out for when it does come to refinancing, and who should consider refinancing right now. So let's first go over what is a rate and term refinance. When we say rate and term, that is because the only things that we are going to be adjusting for this refinance is going to be lowering the rate, most likely, and adjusting the term. So sometimes if people just want to secure a lower rate, we may look at doing a rate and term refinance and doing another 30-year long mortgage. That's typical right now. Sometimes people want to be able to pay it off even more aggressive. Maybe they're in a better financial situation. They've gotten some promotions. They want to look at switching it from a 30-year to a 15-year. That's also considered a rate and term refinance. So it replaces your existing mortgage with a new one. And the purpose for this is to lower your interest rate, lower your monthly payment, or loan term. So there's no cash out involved with this scenario. It's just restructuring for better terms. So again, we can look at moving from a 30-year to a 15-year if you want to be aggressive. Sometimes people may have secured an adjustable rate mortgage. Now they want to secure a fixed term mortgage to lower their risk. And sometimes, a lot of times right now, what we're looking at is just lowering that rate from people who locked in during the high rate environment. So we want to go over why now? What is the benefit of doing it now versus maybe waiting? So Joe, can we go over a little bit of why maybe now should people be looking at if it's beneficial or not to do a rate and term refinance?
Yeah, absolutely. I mean, most of our customers or customers nationwide that have purchased in the last 3 years, they're going to see their rates on a 30-year fixed, probably mid sixes to mid sevens. Mm-hmm. And that's a bulk of people are in that category. And right now we've been waiting for this, as Maddie indicated, for a while. A lot of people thought it would happen earlier as inflation's calming down. Rates are going to have been improving, and we think it's very likely they're going to continue to improve. And so obviously if we can see 0.5% decrease in rates, then it opens the conversation of, okay, let's work and find a strategic, individualized plan for yourself and actually have a conversation of what are you trying to do? Savings? Quick payoff of debt? Do you want to be conservative or very aggressive on the rate, and work out a plan to see why now? Definitely, even if you're not going to be refinancing, you definitely should be meeting with us and planning for a refinance. Mm-hmm. We're going to see just that large of movement in rate. You can see several $100s a month in savings right off the bat. So that's really exciting. Over 30 years, or depending if you do 20 or 15, you're talking tens of thousands of dollars, maybe 50, 100,000, depending on how long you're going to be in that house and what kind of rate we're able to maximize for you. Mm-hmm.
So Joe, some people might say, well, I'm comfortable with my mortgage payment right now. I don't really want to go through the process. Why should I go and refinance at this time?
Yeah, that's a great question. It's really a cost-benefit analysis that needs to be done. It's a very simple calculation. How much is it going to cost? How much are you going to save? Mm-hmm. And people that are comfortable, and a lot of people are comfortable with their payment, my suggestion would be, okay, well, that's great, Maddie. Why don't you continue making the same payment you have been? You have a $200 savings there. Now you're paying $2,400 more off your principal. In the first 5 years, you're going to be over $10,000 less in balance.
Yeah.
Just with a simple taking, a few hours of your time over a course of 3 weeks to plan a refinance.
Yeah. And you're paying that mortgage payment right now anyways.
Yes.
So you can stay with that on the same amortization schedule, keep paying that interest, or redo it, keep paying that same amount, and that is automatically going to catch you up, save you interest, pay it off 5-7 years early, depending on the balance. And
I mean, if no matter what stage in your life, you can take that additional savings, put automatically into investments, invest more. Are you looking to build, you have young children? Do you want to take that $200 a month and start a college savings account? There's some great things you can do with those funds.
Absolutely. So let's go over some more of the benefits of a rate and term refinance. So like we just kind of went over, you can maybe save years off your mortgage if you go to a lower rate, but keep making the same amount of payments. Sam, can you go over some more of the benefits that we have that maybe people don't even know about with the rate and term refinance?
Sure. Yeah, absolutely. So yeah, Joe obviously touched on lower monthly payments, so more flexibility to stash that money or pay extra to get ahead and save on interest. Building equity faster as well. If you shorten the term from a 30 down to a 20 or a 15, more of your payment's going to go towards principal each month, and then you're going to build equity that much faster. And then one thing a lot of people either forget when they're a few years into a mortgage is that they're paying monthly PMI or private mortgage insurance because they didn't originally have 20% equity in the home. And so with that value going up over the last few years, you could be able to remove that, $50, $100, $150 monthly PMI and take that and apply it to the principal each month if we're able to remove that. And then one thing, if we did finance a few years ago in an adjustable rate mortgage, that has either 3, 5, 7, 10 years where it just has that fixed period up front, and the new rate is getting similar to lock that same rate in on a 30-year fix or a 20-year fix. That's something to consider as well, to take that risk out of the adjustment period in the future.
Absolutely.
One benefit too that we didn't touch upon is, unlike a purchase, and we talk about like the complications of going through the refinance process, the one advantage of the rate and term refinance is you actually, if you don't have the funds for the closing costs, you can actually typically wrap those into the mortgage, where you cannot do that on a purchase. If you have an escrow shortage, we can fund that shortage in escrows. That's still, both of those things, even though there's cash being rolled into the mortgage, it's still considered a rate and term refinance. So when we say rate and term, it can cover closing costs, prepaids, escrow shortage, etc. The next tax bill, whatever it might be, it doesn't. It just can't have too much cash out. You can get a little bit of cash out, but not a considerable amount.
And then one thing, my thoughts too, which I often coach clients when refinancing is, maybe instead of rolling all of the costs in, if we were to close in, end of October, they're not going to have that November 1st payment. So if their payment was a couple $1,000s, have it structured so they pay a couple $1,000s at closing, which in essence takes the place of their November payment, keeps their new refinance mortgage a couple grand lower, and then they can just begin paying their new mortgage December 1st.
We really like to take the time to work with each customer because everyone has different goals and objectives. Some people like the little, the skip a payment, and it can get them caught up on some other things that are going on in their life. It's an advantageous thing. Other people, like Sam said, we really dial those numbers in at the end to make sure the balance and the new loan amount is what they want. Instead of just pushing someone into a certain loan amount, we really take the time to kind of explain. This is because it can be very confusing for consumer at the end because they see, okay, why is my payoff here, but my loan balance is higher? Well, they don't think about, we're resetting the escrows, you're skipping a payment. So we have to really explain all that, and they get to choose what they'd like to do.
So as I mentioned in the beginning, refinancing is a hot topic right now. But with that comes some risks that you do want to watch out for if you are shopping and kind of looking around with some different lenders. Lots of people right now are going to be showing, you can refinance and get this super low rate right now. Well, you got to look at the fine print. You got to look at the APR to see, all right, is this actually a great rate, or am I going to be paying thousands of dollars in points? And then at that point, is it even worth it? So let's go over a couple of things to watch out for. And so closing costs typically for a refinance are about 2 to 5% of the loan. And so, as we mentioned before, sometimes you can wrap that into the loan, but you should always look at that. What are they going to be charging there? Are they charging a huge amount of fees for this rate that maybe it doesn't make sense then? Maybe we should wait a little bit longer so that you don't have to pay these points to be able to refinance, because it's just not beneficial at that point. You should definitely be talking with your lender about the break-even point. Sam, can you go over a little bit more about what the break-even point looks like?
Yeah, sure. So there's a couple different ones I like to factor in when educating clients on refinancing. The first one being if your costs are gonna be $2,500, let's say for even numbers, and you're gonna save $250 a month. That's basically dividing $2,500 that you paid in costs to lower the rate or do the refinance. And then that $250 per month is going to take 10 months of your monthly savings to recoup that $2,500. And then the other break-even point I like to look at as well is over the first, depending on how long they're going to be in the home. If it's the first 2 years, 3 years, 5 years, if you're spending $2,500 in costs right now, in the course of 5 years in interest savings from your current rate to the new rate with the refinance, what does that compare to? Are you going to save, $5,000 in interest in the first year, but you're spending $2,500 to get the loan done? That's, definitely makes sense to do that because you can see the instant savings right there.
Absolutely. So when we're talking about your refinance, make sure you're also talking about your long-term goals. If you know that you're not going to be in your home forever, if you plan on moving up, maybe you're growing your family and you're going to need a place with some bigger bedrooms, that new rate is very attractive, but maybe it's not beneficial right now. You want to be able to then maybe wait until you do buy the new home to then secure the lower rate because the cost benefit isn't going to be there. Now, some people might just say, you know what? Yep, let's get this rate. Let's go through. But you really got to look at the full financial picture. And that's one thing that I think that our team does really well is that we ask those questions, not just about the immediate savings, but more about, all right, is this beneficial? What does your family goals look like? What does your job goals look like? Are you going to be moving anytime soon? What does your full picture look like? Because we really want to make sure that you are going to be in a good position with this refinance.
Tell us your story. That's what we say. Tell us your story. Tell us everything. Because we might hear something that we might want to bring out in the conversation to point out that, you're, like Maddie said, you're moving in 2 years. You're going to, maybe refinance does make sense in that case, but it has to be a no-cost refinance, no cost involved. And when we say no cost, that doesn't mean the closing costs are rolled into the loan amount because some lenders will use that terminology.
Exactly.
No cost means no cost, and it means that the lender is paying the costs on your behalf. And the reason they can do that is they're giving you above market interest rate. So if the interest rate's such and we go higher, there's a credit that can come, and that may make sense if you're moving soon. Yeah,
and the cost really too, if you're not thinking about what the costs are, you have to pay for a new appraisal, potentially the bank processing fees, title fees. So those are all of your costs that actually you have to pay again when you're doing a new loan. So that's, like Joe said, you can pay for that with an above market interest rate. So you have a zero break even point where you're spending zero, saving, $200, $300 per month, you instant savings because you're not paying any cost to do it.
Absolutely. So definitely a couple of things to watch out for because every time, you hear it's a very hot topic in social media right now, like, rates are dropping, time to refinance. And it's a lot of clickbait out there to just kind of get you to refinance, and which is great. And a lot of people should be considering it, but you still got to look at the fine print and making sure that whoever you're working with actually has your best interests in mind. So let's talk about a little bit of who should consider refinancing. So we mentioned that a lot of people who have bought within the past 2 to 3 years that have mortgage rates, either in the sevens, maybe you have an adjustable rate mortgage that is coming up where it could be adjusting. Some of those people should be looking at refinancing. Or, there's some cases that maybe you are in a better financial situation. Your credit has improved, your income has improved. Maybe at this point, it's good to check in to see, all right, can I get some better loan terms for this? So let's talk about who else should be looking at refinancing. So Joe, can you go into a little bit more?
Yeah, well, the other thing we didn't touch upon yet is we're not just talking about conventional loans. There's VA loans, FHA loans, jumbo loans, construction loans in some cases. So let's not forget about that. VA has a very simple interest rate reduction loan that a lot of veterans use. So, if those keywords come across of, what type of loan I have, that's something to consider too. So it's not just for conventional buyers. Also, people that may have had a poor credit score previously and their score has improved, not only will they take advantage of the current market rate, they'll also take advantage of that better score. So I think almost really anyone that's bought in the last 3 years, kind of no matter what their situation is, really should have a conversation with us. And kind of, there's no cost involved in having that conversation and doing that analysis. We can create that break-even point. Also, anyone we talked about previously of if you had a home equity line of credit and a really good first mortgage rate, analyzing if that should be consolidated together. That's someone else who had, would. So high debt, multiple mortgages, anyone purchased in the last 3 years, that would be a good criteria right there.
And I would say that a lot of the conversations that we're having right now with some of our borrowers who have purchased recently, who are just, very anxious to get rid of their higher interest rate, sometimes when we're looking at it, we ask them their full financial picture. And when we look at it, maybe they could secure a 0.25% difference, but when you really look at the cost benefit, it's not worth it just yet. But one thing that we go over with them is like, all right, for your situation, here's going to be what the rate is, what we need to get down to so that it's beneficial. And then once we have that rate, we can have an application on file. As soon as we see rates get lower, at that point, we can give you a call right away, get that locked in, secure it, because sometimes rates do drop, but it may only drop for a day, a couple of hours. Rates are so volatile right now that it's so important to start having these conversations early so that we know what your goals are. We've already had this conversation. We know what rate we are targeting, and then we can help put you in the best financial situation to secure it as soon as possible.
Yeah, the risk of waiting can be pretty dangerous, actually. All it takes is a Friday unemployment number to come out, oil prices to surge or decrease. It's very market based, and it's not as obvious as everyone thinks it is where rates are going. So when you do fit into your goals and objectives, my experience is you really should take advantage of that. Also, what happens is when we're in the middle of a refinance boom and Fannie and Freddie and our investors have all this demand, well, then they increase their rates because there's all the demand for the product, and it's harder and becomes more challenging to secure a really good rate. So early is usually more beneficial, has been our experience.
Yeah, for sure. And there's a lot of times when people are just thinking they have their mind set on a number and they're going to wait for it to get there, and that's the goal, but that's not necessarily a goal, nor should it be a goal to just chase a number. You basically want to overview the whole picture, do a full analysis of every way to save and what you're looking at, and then from there make an educated decision.
Absolutely. So there are some common mistakes that people do make when it comes to refinancing, or maybe just some misconceptions that they have. One thing is refinancing too often. So what that looks like is some people may think, oh, when it drops 0.25%, I'm going to refinance. When it drops again, I'm just going to go and refinance again. That's not going to be the best case scenario, because you do have to take into consideration the cost benefit in there. We want to make sure that you aren't refinancing a ton with this mortgage. Let's look at to see maybe we can just do one refinance and then maybe put a plan out there for the future. But multiple refinances within a short period of time is never really a great option. You don't really want to overlook your long-term savings for short-term gains. Again, that goes into just making sure that we're looking at the long-term cost benefit of it. And then also ignoring how long you plan to stay in the home, as we mentioned before. If you're only going to be in the home for a couple more years, really see, is this going to be worth it right now? Of course, it is a higher rate, but is the cost of lowering the rate and the refinance, is that actually going to fit your long-term goals? So just a couple of mistakes.
I think also one mistake that's pretty critical and can be done right at the closing table is you really should determine what you are going to do with those savings. Mm-hmm. Because like you said earlier, Maddie, people are comfortable with that payment. You should have a plan for those dollars. Mm-hmm. Of, okay,
100%.
I'm saving $200. Don't let the taking advantage of that rate just go to waste. Mm-hmm. Really, even if it's just taking it and putting it in a savings account mm-hmm. or investing it, or mm-hmm. you should have a plan for those dollars, because guess what? If you don't, they're just going to mm-hmm. go elsewhere. And then it's not as beneficial as it could have been.
Yeah, and kind of that is one point, too, which we talked about earlier, is if you are saving $200 a month, you're comfortable with your current mortgage payment, right at closing, set up an additional auto pay to pay that extra $200 right to the new mortgage, mm-hmm. and that would blow people's minds to see what just $200 a month that they're already paying right now can save them. Oftentimes, depending on the loan amount, it's 3, 5, 7 years cut right off the term. So then you don't have to worry about, I was 2 years into my mortgage, now I'm going back to a full another 30-year term.
And even if it doesn't even if you think you're going to be moving up in a couple of years, I had a customer one time that we flipped from a 30 to a 15-year mortgage. Mm-hmm. And they were only in the house 3 years. Mm-hmm. And it was when the market was kind of difficult, the housing market was difficult. But that simple switch from going from a 30 to 15 and moving them into a better equity position, mm-hmm. there's no way they were going to be able to sell that house mm-hmm. and take advantage of a much more expensive home that was reduced. Mm-hmm. They would have never made that transition had mm-hmm. they not flipped. So even if it's not paying it off quickly, mm-hmm. it's even putting you in a better equity position, makes it easier to sell, makes it easier to do a home improvement loan later. Mm-hmm. It just makes everything easier.
Yeah, absolutely.
Definitely. All right. So today we talked about what is a rate and term refinance, who should be considering a refinance, some of the things, the risks to watch out for when it does come to refinancing. So again, if you have bought in the last couple of years, your rate is in the 6 or the 7s, or you just want to see if you can put yourself into a better financial position, now is the time to reach out. Reach out to us, reach out to your mortgage lender, see how you can strategically put yourself into the best position for your long-term goals. So refinancing could help your chance to free up cash, pay off faster, increase your equity, or maybe even ditch mortgage insurance. I think that's a big one too that Sam touched on earlier. So that is everything today for the rate and term refinance. If you think that this would be beneficial for you or a friend or a family member, please send this over to them, reach out to us. Let's have this conversation. Let's talk about your long-term goals. We would be happy to help set you up for success. So that is everything today on Real Take Real Estate. We will catch you next time. Thank you so much for joining.